Awesome. Nice to see all of you still here to the end of the day. See, I think where this whole session was conceptualized was, a lot of conversation through today has been about what is India's AI opportunity, what do we build out of India, what is the unique advantage that India has. And within that framework for us at Elevation, it's been very apparent that financial services and building AI for financial services is probably the largest opportunity that can be built from the country today. And I want to take the next 10, 15 minutes broadly walking you through why we think that is, what does it take to build it, and what is truly the India advantage over here. Very quick introduction. I lead FinTech and Financial Services at Elevation Capital. We are a 25-year-old venture capital fund. The unique vantage point we have is, we've been investing both in tech-first companies, but also at traditional financial services, so branch-based NBFCs, insurance manufacturers, AMCs of the like, which gives us a very unique vantage point of what's happening within the customer segment and the persona as well. And seeing that vantage point, it's very, very clear to us that this opportunity set is very real. And having now done this for over a couple of decades, we also feel the two big questions which was always asked about software and financial services has been, one, is there addressable market in India? Is there a TAM in India? And two, it's very, very difficult to replace legacy software out of financial services. So can you really go and build something new? Where again, for us, AI is a true inflection point. It really increases the addressable market. It also creates the right tailwinds and the inflection points for legacy software to move and new software to be built, focusing verticalized on financial services. I have a fairly dry slide, unlike Rohan's slide, but I thought this will also show you that AI didn't make it. I put in the bullet points myself and made it less fancy. See, very quickly, it's obvious that, all services, whether it is healthcare, whether it is legal services, IT services, those are the areas seeing the most amount of ROI, deployments in production, and clear value accruing to the companies, right? Now, if you take a step back and say, which is the largest services sector in the country today, in the world today, it is financial services. I think by market cap, by people employed, by anything else, it is financial services. And hence, it is very apparent that where you see most amount of value creation should be in financial services. Second, when we speak to banks, when we speak to different BFSI institutions in the country and outside, the pull is very real, right? Think of all the other previous platform shifts that happened, whether it is, mobile, internet, cloud, whatnot. Banks were always skeptical. It took a long time to convince them to say, think of this platform shift. Today, it's very different. Getting that first AI meeting is actually relatively easy. Both conversations are about what are you doing on AI. So the pull is very real. So you take it from any vantage point. Is there ROI? Is there pull from the customer segment? Is there tech readiness to make this happen? It looks like all that perfect storm is brewing together at the right time. See, the other strong belief system we have is AI for financial services will have to be heavily verticalized. Software for financial services has been verticalized to some extent, but it feels AI, the only way true adoption will end up happening is by building something very verticalized for financial services. Few reasons, of course, there is this whole regulatory and compliance angle and, the whole AI stack being compliant to whatever the regulator feels needs to be done. More importantly, there is a need for explainability, but also the way to think of this is, ML, predictive AI, data sciences have been fairly prevalent in financial services. So almost the way for the new wave of AI to work is to work with the predictive elements which are existing in there, and those two have to sort of mix well together. And that again requires a fairly verticalized approach. And, finally, the magic is not in doing that small point solution, right? It's very easy to build, let's say, an AI product which listens into customer calls and then gives you insights from that. It is about building that true end-to-end workflow. So how can you really build something that listens to the call, plugs into your internal system, gets information from there, figures out what the next part of the workflow is, autonomously executes that part of the workflow, goes multimodal, gets into some other medium and reaches out to that customer. That's when the magic happens. So for that whole workflow to also to come together, we do think it will require fairly verticalized solutions. So just to go back, services is where we think most amount of action is today. Financial services is the biggest services revenue pool. Within that, we think very verticalized solutions will have to get built. See, and the other very interesting dynamic in financial services is they run on dinosaur software, like absolute dinosaur software. If you go in and look into the operations of most of BFSI, they run on fairly legacy stacks. There has been huge resistance to move out of that. You know, people could get fired for choosing a new software. You're just happy letting it run the way it's running. So what you need is a powerful force to really get companies to think about moving on from there. That's where we think, again, AI is really at that inflection point where you can create a 10x better experience. And hence create the ROI, hence create the budget, hence create the right board pull, whatever else is required to first maybe augment the legacy software and then over time to replace it. So it's very interesting. We think just in software built for banks and BFSI, there is a nice perfect storm brewing again. There's of course AI. At the same time, what the regulators are doing in India, just the kind of bar they have on customer experience, what they're asking in terms of audit, what they're asking for things to be real time, how some banks have already upgraded their experience, all of that put together, we think is really creating that force to really move away from the legacy products and legacy software that a lot of financial institutions run into something more modern and new age. See, and the final belief system we have is products will also need to be very India first and built very India first. I mean, some of these India specifics are very obvious, whether it is the language diversity we have in the country, whether it's the local regulations that needs to happen. But also the other interesting dynamic is most AI native, AI first companies in the world are still very young. Nobody is GTMing for India, nobody is building products specifically for India. You know, that also creates a very unique surface area where, you know, companies in India could build for India for a very large market where the tailwinds are there. Let's make it a little real. And this is coming from our conversations and actually seeing what is happening already. These are things which are already in production environments where we are seeing adoption happen. And I would think it is one of the first platform shifts where so early on, literally a few years from, you know, the first LLM that we saw, you know, I can talk about a fairly significant amount of production adoption happening, right? Of course, the very obvious one is the whole thing on the customer communication stack. And within, if you think of the financial services world, there is customer service, there is sales, and then there's collection, which is very unique to financial services. Again, as I said previously, the magic in all of this is not to be the point solution or the voice agent delivering that call, right? Like, think of collections. It's very easy to build a voice agent which does a very personalized call to a customer and say, hey, you know what, your payment is due, make the payment, be a little interactive in that conversation. We think products that will end up winning are somebody who will build a more end-to-end workflow. So think of, and it's obviously a multi-agent system where some agent is calling, having that conversation, it is able to negotiate with the customer on the conversation, post the conversation, think of next steps, go into your internal systems, figure out additional information about that customer, autonomously run the next set of steps, which could be calling the customer at a different date, which could be following up with the customer on a different medium, work with internally existing predictive ML models, which exist on the collection side to really put these customers into different cohorts, and then continue with the workflow, right? So we're seeing a lot of proliferation of point solutions on all these areas. But we really think, and if you're a builder building in this space or thinking of building in this space, my strong push is pick one of these and go fairly deep in the workflow. And don't be restricted to a point solution. A lot of this will get commoditized very fast. The other interesting bit, which I find quite fascinating, is this middle and back office automation. Today, almost 40-50% of people in BFSI in India are employed in middle and back office. And you go and look at any of these operations fairly deeply, and even if your understanding of AI was literally a 30-minute read on Wikipedia or ChatGPT, it will be apparent to you that each of this is going to get disrupted and going to change the way things are happening, right? And few examples, and some of these we've started to see adoption already start to happen. Think of what happens in the compliance function, right? Think of the regulator, they're putting out circulars, there is existing policies, all of it is unstructured data. Somebody needs to look at how does policy work with what changes have come in, think of what changes need to happen, figure out the whole workflow for those changes which need to happen to my policy or my processes, and after that create a more continuous monitoring loop. All of that is possible today. Like, each of you understand where the technology is today. When I describe this to you, it's fairly obvious that all of this can get built today with what is available today. Or think of something like fraud and risk. A lot of work has happened on fraud and risk, which has been more about flagging cases, which is to say, I think this could be a fraud case, this could be a high-risk customer or whatnot. But after that, there's been a very, very intense manual investigation flow. So people have to look at disparate data sources, unstructured data, think about whether this is the customer who is truly high risk, and then think of the next set of actions for them. Again, you can all very well imagine different agents coming in, picking information from different sources, connecting the dots, and then figuring out, with maybe a human in the loop to begin with, to say how should this customer be processed. Similarly, with credit and liability ops, I mean, if you go into the credit operations of a bank or of any lender, there is an underwriting process, which itself, a lot of changes are happening. But even after that, there is a fairly large series of credit ops. Today, where vision models are, where, you're able to look at these completely unstructured documents, can you automate a lot of these maker and checker processes that exist before the disbursement of the product to the customer? And these are some examples. I would almost urge anybody thinking in this space to find those few design partners, pick one of these slivers, go spend some time. I think the workflows will become very, very apparent to you on what you can pick up and how these can very easily be made, 2 to 3x more efficient on day zero, and of course, faster from there. Yeah, so that sort of brings me a little bit to where I want to close. I think TAM has been a question, addressable markets have been a question for a long time. Now with, how we think about AI disrupting different slivers of the banking or the BFSI ecosystem, I think that TAM is no longer that software pool of a few $1 billion. Your TAMs are fairly large and fairly different. Today, most financial institutions are operating at 40-50% cost to income ratios. That entire 40-50% is the revenue pool you are looking to address in the more long term. And we are very actively investing in this space. Some of the spaces that I spoke about, we have made some investments there, still very, very actively looking at it. We also think, as I said, India is a very fertile ground, very large companies will get built. We think at least half a dozen to a dozen companies will get built purely AI native building for India, very, very large outcomes. And all these companies will also have a very natural advantage to go global, because an HDFC is a very referenceable logo when you go out to sell in the world, and ICICI is a very referenceable logo when you go out to build to the world. So it's a great starting point to build here. It's still a very large market. Inflection point is real. And then after that, the world's your oyster.